Hello and welcome back to the Volunteer Income Tax Assistance Training Series. My name is Chris Moon. I am an Associate Teaching Professor at the Ivy College of Business at Iowa State University. This lesson is focusing on income from wages, interest, and dividends, and also from certain government payments. So we will go through each of these items and talk about when they need to be reported and how they need to be reported. So we are going to talk about taxable versus non-taxable income and the importance of distinguishing between earned and unearned income and how to report that information correctly. All right, so if you look in section D of your 4012, that entire section is going to talk about income. And there are tables in section D that are great quick reference guides. This table A shows you examples of taxable income. It is important to note that not all of these items that are listed as examples of taxable income are within scope. So making sure, as we are looking at what the taxpayer has for taxable income, that we're also making sure that the taxpayer's return is in scope. So if, for example, they have rental income, if the taxpayer does an Airbnb, that's out of scope. Definitely taxable income, but that return is going to be out of scope. So just double check that scope document before you start the return. All right, so examples of non-taxable income, which means income that does not need to be included on the tax return: gifts and inheritances. Even though a gift may be taxed by the giftor, or the inheritance may possibly have some inheritance tax or estate tax, possibly, it is not taxed to the recipient, so the person who received that does not include that as taxable income on their income tax return. Other exempt income, so income from municipal bonds would be an example of exempt income that we would not have to include on or in the taxable income. Difference between earned and unearned income is important, especially if you have a client who may qualify for the earned income credit. So we want to, if they only have unearned income, they are not going to qualify for the earned income credit because they do not have earned income. So making sure you know the difference between earned, which is received for work such as wages or running your own business, or unearned income, which is an example would be interest income from investment. So here are some examples of some forms that the taxpayer might bring in that would result in reporting of taxable income. The W-2, of course, that one is probably very familiar to you. 1099 INT, DIV, or G. The 1099 INT is for interest, DIV is for dividends, and the 1099-G is used to report tax refunds or other government payments. So if the taxpayer brings one of those in, it may or may not be taxable, so it's just important to look through that form. You can see Navigating TaxSlayer Pro online. In the income section, you can see different incomes or categories that you can start. So if you have a 1099 INT and a 1099 DIV, you're going to begin the Schedule B. All right, so we'll go through, so the 1099-R is for retirement income. We'll go through that one in a later lesson. But each of these income categories in TaxSlayer, you would start each one of those for each level of, or each type of income that the taxpayer has. It is really important that we probe the taxpayer to make sure we know all of their sources of income. It may be possible that the taxpayer has interest income that did not show up on a 1099 INT. Generally, they're only going to provide a 1099 INT if the interest is over $10. But if the taxpayer has $5 of interest income, they still have to report that on their tax return. They're just not going to have a tax document for that. So up to us to make sure that we are going through the intake form, all the sources of income, whether they have a tax form for that or not. All right, the W-2. The W-2 is going to be entered as wage income in TaxSlayer, and it is very important that you enter the information exactly as it shows up on the W-2. Don't amend it, even if the taxpayer tells you something doesn't look right. If the taxpayer thinks that the W-2 needs to be amended, they need to get an amended W-2 from their employer. We should not be changing it. So you can see that box 1, 3, and 5 show wages, Social Security wages, and Medicare wages. Take special note of this because when you're in TaxSlayer and you enter whatever it is in box 1 usually defaults to box 3 and 5. However, box 1 is not always the same as box 3 and box 5. So make sure as you're entering this information into TaxSlayer that you double check to make sure the correct amount is listed in box 3 and box 5. Also, if you have a taxpayer who receives tips, the amount shown in Social Security tips may be, there may be an amount shown in Social Security tips. So just make sure you're double checking that as you enter the information into TaxSlayer, it shows up exactly as it is on the W-2. So this, I was just talking about making sure on this income section of the intake form that you are getting all of the income information from the client, even if they don't have all of these boxes checked. If they do have some checked, go through them with the taxpayer. I usually ask about interest income because, one, they don't always know that 1099 INT is a tax form, or two, they may have had interest where they didn't actually get a paper 1099 INT or even DIV. So I ask them if they have any investments, if they have money in the bank, and then I sometimes ask them to log onto their bank account just to make sure that we're reporting all of the interest or dividends that they received. So again, I already mentioned this, but the taxpayer may not have all the tax forms, but if they received income and they are required to file a tax return, that needs to be reported on the tax form. All right, scholarship income is generally reported to the taxpayer on a Form 1098-T. So you likely will see this 1098-T with an amount in box 1 and an amount in box 5. The amount in box 1 represents the amount that the university has on their records for payments received for qualified tuition and related expenses. Generally, the university goes through the student's account and adds up all of the qualified tuition and related expense amounts and puts that in box 1. Any scholarships or grants that the student received then will go in box 5. It is up to us to offset these two numbers. Okay, so if box 1 shows $15,000 and box 5 shows $20,000, then the student / taxpayer has $5,000 that they must report as income. Scholarships are only excluded from income to the extent that they cover qualified tuition and related expenses. Sometimes the students will tell you that they paid for required books or required supplies that were not on their student account. And if the student tells you that, you can take that off of the $5,000 or whatever the excess is. But it's up to the student, it's up to the taxpayer to be able to provide documentation to the IRS for those amounts if they happen to be audited. Okay, so we need to offset box 1 and box 5. If box 5 is more than box 1, the difference is included as income. If box 1 is more than box 5, that amount may be used for possibly for education credits. So it is important to take a close look at this document and make sure you know to offset those two amounts. All right, interest income is unearned income, and that if it's more than $10, it is reported on a Form 1099 INT. That is it's reported on the tax return where I showed you on that in TaxSlayer. If they don't have a 1099 INT, you still can report the interest in TaxSlayer just without indicating that there was a 1099. Same with dividends. Generally, the dividend, the Form 1099 DIV will show what amounts are qualified, and it will show the ordinary dividends and the qualified dividends. Make sure that you are separating those out as you're entering the information into TaxSlayer, and TaxSlayer will it will do with that information as it needs to, as long as you enter it in, as long as you enter it correctly. The qualified dividends are generally eligible for a lower tax rate, so make sure if there are qualified dividends that you get that amount entered in. Sometimes with interest, dividends, and capital gains, sometimes a client is going to have a combined form instead of just a 1099 interest or a 1099 dividend. So you may have this combined form that has all of these separate forms on it. So just make sure you're taking the time to go through that. The dividend income, you can see this is a copy of the 1040. The dividend income is reported on line 3. The interest is going to be reported on line 2. The line 3 is dividends, line 2 is interest. And then you may also have capital gain, and that would be reported on line 7. So if you have one of those, we're not generally talking about capital gains in this lesson, but if you do happen to have one of those combined forms, just make sure you know that all of those things will need to be reported separately. All right. There are certain items that are out of scope. If you have unrecaptured Section 1250 gain, that's out of scope. Cash liquidation distributions, non-cash liquidation distributions. If the 1099 DIV box labels the payments as though those are going to be out of scope, so take a look at that before you start the return. Okay, if you have a client who gets a 1099-G because they got a state or local refund, you are only going to report that if they itemized deductions last year and received an income tax benefit from that. So generally, we have most of the clients that come through the volunteer income tax program have, of course, they have lower income, and so they generally don't have enough itemized deductions to be able to benefit from that. So if they took standard deduction, we do not have to report the state and local income tax refund that they received. Okay, alimony. It is important to note if the taxpayer has a divorce decree that is between 1984 and 2018. If the divorce decree is 2019 or later, the taxpayer receiving the alimony does not report that in income. The taxpayer paying the alimony does not get a deduction for that. If it is before 2019, so if it is 2018 or earlier, the taxpayer receiving the alimony has to report that as income, and the taxpayer paying that is going to be able to deduct it. So this is another, we already talked about this in the intake form, but this shows up on the intake form. If the taxpayer has alimony or they pay alimony, you will determine if it is excluded from income, or an adjustment to income, depending on when that divorce decree was entered. So make sure you pay attention to that. All right, so this lesson covered income that is reported on Form 1040 and Schedule 1. We talked about the difference between taxable and non-taxable income and the importance of knowing earned income versus unearned income. There are several items listed here that are out of scope for this lesson, so just take a look at those, and hopefully this will help you with the beginning of the income section on the tax return. Thank you.